this is what we are going to. I'm currently in trade. I'm trading. Okay, I don't know if you see my listing or something. I'm trading. So, um, so then we have to start. We have to learn something today. So what we are going to learn is basically I'm going to share the screen so that you see what you are going to learn today. So this is what we are going to learn today. Okay. This is what we are going to learn today. The objective is by the end of this lesson, Mentee will be able to understand what Forex is, identify currency pair types, distinguish between base and code currency, understand key terms like pips and spread. You get it? Today is actually the first day. But so do you know all of this, right?
Yes.
Okay, so well, how do you understand all this?
Forex trading is you exchanging um currencies. So it's like, in other terms, you buy, then you sell, you get that. So it is basically exchanging currencies and making profits from either buying or selling.
Okay, so okay, okay. So what forex stand for foreign exchange. Okay, foreign exchange markets, and is the largest, most liquid financial market in the world. Okay. So forex market's purpose is to facilitate international and investment. You get it?
Mm-hmm.
So as we, the trader, we speculate in terms of the price movements of different currencies. You get it? That's it. We are predicting. Let's say we will say, okay, euro will be stronger than US dollar. Okay, so we are speculating. We are speculating in terms of we'll do fundamental analysis, we do technical analysis, and say, okay, euro will be stronger than the USD. You get it? Yes. So that's how we, the trader, we speculate the market. And how does the market work? Can you tell me something about how does the market work? How do the markets work? How do you know, okay, this market, this is how it works or something like that?
So no idea.
Is it? Hello?
No idea.
No idea. Okay. In the market,
Yeah.
okay, the market works like
Mm-hmm.
buyers and sellers. Okay. So it's
Okay.
for every buyer, there must be a seller. You get it?
Okay.
For you to buy euro, you get it? There must be an exchange. Someone who is willing to sell it to you. You get it? So
Yeah.
when there's more buyers than seller, okay, that's where you see that the market is moving up. You get it? It's like
Yeah.
demand. Okay. So whenever you see that, okay,
Okay.
you see that when you are buying something at market, okay. Let's say you are buying let's say people are buying Benz, okay. Most of the
Okay.
people, you see that people are buying Benz is more. Automatically the price will go up. You get it?
Yeah.
Yes, because people are liking the Benz, so automatically it will be lead to shortage of Benz. So the price will be
Yeah.
increased more than, you get it, this
Yeah.
thing. So it's the vice versa. And while there's more than the sellers, when there's sellers are more than the buyers too, the price tend to what decrease. You get it? When a majority of
Yeah.
people, let's say, when you go to Unibuy and you are buying an iPhone, okay, when you pass here, you see people selling iPhone. You pass here, you see it. That means the competitive is very high. So automatically, someone will sell it low price. You get it?
Yeah.
Yes. So that's how the market works. So this one, it will
Okay.
lead in the chart. We'll go to the chart and then to portray there. So it's actually,
Okay.
you see that it's very basic, but it's not basic. Like that's what we use to trade. You get it?
Okay.
Uh,
Yeah.
so we know how the market works. Okay. For you to buy,
Yeah.
there must be a seller. You get it? And then
Yeah.
yes,
Yeah.
that's how it is. So what do you know? Do you know something about brokerage? Brokerage, let's come here. So now something, there's something I don't understand about um forex trading, or you don't understand like this, the overview. There's something I
Okay.
don't understand.
So nobody, you you said that how the market works. It works um by buyers and what sellers, right?
Yeah,
So when buyers buy more of maybe a currency, then that currency, the price of that currency will go up.
yeah,
Then if there is a less demand of that currency, then that currency would the price of that currency will, or the value of that currency will reduce.
yes,
Right. If
yeah,
I heard it clearly.
yes. So look at today, look at British pound dollar, okay, to dollar.
Okay.
You see that today, moment when the market is sell actually. You get it from the opening. You get it. Aha. And then that
Yeah.
means the sellers were more than the buyers.
Okay.
You get it. Aha. So let's say
Okay.
around one New York session, the buyers start
Mm-hmm.
coming in. So that means in this scenario, like the buyers were more than the sellers. That's why the
Okay.
markets would trace like that. You get
Okay.
it?
So
Yeah.
when when the buyers are more than the sellers, then it pushes
Ah,
it pushes to pushes up.
yeah.
And when the sellers are more than the buyers, it pushes down.
Yes. You
Oh,
get it? So if the buyers are plenty, like automatically the price of that currency will go up because most of the people
okay.
are buying it. You get it?
Mm,
And
yeah.
when there is selling to, that means the value of the currency is depreciation. You get it?
Okay.
Yes. So
Yeah.
you see that the market is selling and all that. So you understand it, right?
Yeah, I understand this one.
Okay. So you see that it's actually it's in the market. You see, it's
Yeah.
in the market. Yeah, that's the example that I've showed you right now. That's the example. So let's go here. The brokerage account and the broker. What do you understand by it? This thing is very short. I mean, we have 2 months, right? And it's plenty, so we have to go fast. We get it so that we will get
Okay.
we'll go trading actual the practical activities, so that because I don't know when you have more experience of it, so we have to be fast.
Okay.
Yeah. So what do you understand by brokerage?
Account. Okay. So I I've learned that before you can trade or you can place a trade, You
Okay.
you need a brokerage account, and that brokerage account is is where you are going to keep your money to help you to place your trade.
Okay.
Yeah.
Okay.
So
So
what they do is they hold your money and they help you to trade.
okay. So okay. Well, so what I'm going to say is that broker is a company. Okay, the company that acts as
Yeah.
an intermediate that facilitating transaction between the trader, buyer and then the seller. You get it? So
Okay.
they're essentially the middleman handling the details of dealing for fee. Okay, they deal for fee. They don't just they say they are middleman, so they will just do it. No, they do it for fee. You get it?
Yeah.
So whenever you are selling when you are selling this currency pair, you get it. There must be a buyer.
Mm-hmm.
You get it. So the broker will stand between you and the buyer. You get it. Yes.
Okay.
So yeah. So we have different types of broker. You get it. But as for us, we are the forex
Mm.
brokers. But we have stock brokers, real estate brokers, and different insurance brokers. You get it. But
Okay.
we are more of forex brokers. You get it. So
Okay.
that's how it is. So the broker will sell as intermediate whenever you are buying. The broker is there to execute it for you. You're gonna
Okay.
patch you to the other one. The if you are buying, gonna patch you to the seller. You get
Okay.
it? So
Yeah.
how do you know how the brokers make money? In terms of now, you hear that the fees, okay, they get fees. So how do you know in terms of
Mhm.
how they get money in terms of the activities? In terms of your experience or what you've learned?
I can't, yeah. I can't remember that I think that they get money uh, through something called spread,
Okay,
right? Through spread.
okay. So that's it. That's what you know, eh?
Yeah, yeah, that is what I mean.
Okay. They make money from different types of activities. Okay. The spread is one. The
Okay.
spread is one. The commission. They made money from commission. Swap. I don't know if you've
Okay.
heard swap before. Have you heard of swap
No,
before? Okay. The swap
no.
is an overnight fee. When you open a trade and you leave it for another day, you get it.
Uh-huh.
You're gonna pay
Yeah.
fee on that. You get it.
Oh, okay.
And now they have
Yeah, I get it.
behind the scenes one too. That's what they get money from most of the time. That's their business model. So we are going to take it
Okay.
one by one. So when they say spread in the financial market, there is always a bid price. You get it? Bid price, the highest price of a
Okay.
buyer, highest price a buyer is willing
Okay.
to pay.
Okay.
Uh-huh. And the ask price is the lowest price a seller is willing to accept. You get it? So
Yes.
the difference between these two price is the spread. You get it? So let me see if I
Okay.
can do some settings so that the spread will show here. I'm coming in. Because I want to show you that I have a spread. Okay, so when you look at my chart, you see it. When you look at my chart, this is what you see. You see something like this: ask and a bid. You get it?
Yeah.
So the difference between this bid and then ask is what the profits from it. In my explanation, I told you that the bid price is the highest price a buyer is willing to accept. You get it? And then the ask price is the lowest price the seller the seller is willing to accept. So let's say now here, let me do some example here. Okay. If you look at this ask price and then the bid price right now, if you are buying now, if I'm saying I'm buying now, you get it. The market, they will give me this price because I'm buying. So the seller is willing to give me this price. You get it? Yeah. So meanwhile, you see that the currency rate or the rate is not that level. By the moment you press a buy, it will get to some level. You see that your order has been placed in forward. Meanwhile, the price is not there yet. So that one automatically you'll be in loss. You'll be in loss at that moment. Unless the market move to that level before you start making profits.
Yeah.
You get it? The same as selling too. The same as selling too. If you are selling, okay, the buyer is willing to accept this price. That blue one. You get it? So meanwhile, you see that the rates, maybe that moment, let me use it here. Here will be better. So in trading, nobody is, gets profits immediately in enter trade. You get it? Nobody.
Okay.
Yeah, nobody. It doesn't happen anyway. So in this case, like if I'm selling, then the buyer who is buying, okay, I'm selling, someone must also need to buy. You get it? So the person who is buying is accepting this price. That blue line. You get it? But meanwhile, you see that the currency rate is not that level. It's not in that level. So the candle needs to move to come to that blue line before you start seeing profits. That's why we say most of if you are choosing brokerage, you have to choose a broker who has minimum spread, low spread. You get it? Because sometimes if you have a broker who has spread, the spread is very large, you will not be profitable. Even though you are good, you will not be profitable. Anytime the market will move in your favor, you see little profits. You get it? In order to the brokers to make money, they make money from that current exchange rate to that acceptable, price that they are accepting, whether you are buying or selling. They make that moment that you are in the loss and
Okay.
then you cover, they've made their money. You get it?
Mm,
Yes, that time they've made their money.
yeah.
Yes. So that's why. Is there anything I don't understand?
Yeah. At first, what you're explaining right now was a challenge. I was like, how come, like, you want to place a trade here, and where the go and draw the line will be like somewhere on top of where you wanted it to be, the current price.
Yeah.
So I'm very very happy that you have made this thing clear for me to understand
Okay.
how they used to. And so I do understand it now.
Okay. Okay. So that's how it is. So in trading, nobody is profitable
Okay.
whenever you place a trade. You get it? Ha. That's when it
Okay.
comes to risk management. It's very, very important. When you enter some loss side that is very bigger, you'll be in much more loss, which is not good.
Mm,
You have to cover all those losses before you get something. Uh-huh. So now we so other way to that they get money from is the commission. You get it? So that's the
okay.
fixed fee that each trade, like when you take a trade, they will charge you for that maybe $5
Mm,
or $3 or $2. They've charged you. So any trade that you take or you press a buy key, they will deduct our money. So in that way, you see profits early. You get it?
okay.
They
Yeah.
deduct that money from your account. That's the commission. You get it?
Yeah, I get that.
Ah, yes. So I think I have to write so that you will see. The first one was spread, eh?
Um,
Spread. The other one, commission. Commission. And so now you understand the commission, right? You
yeah,
understand the
I
commission.
understand. Yeah, I understand.
So this is how they make money. You get it? Uh-huh. So hello, are you there? Are you there?
Yeah,
Okay. So in that,
yeah, I'm here.
okay, they make money from spread, commission. Commission is the fixed rate that they charge any trade that you take, any execution. You get it? Uh-huh. And then the swap or overnight fee, that is the when you place, most of the time if you are a swing trader and then you open a position and then you leave it for another day to come, they will charge you an amount of money. You get it? The
Oh,
reason
okay.
the reason they
Okay.
charge you is that most of the time when the market is closed, you get it? When the market is closed and it opens, when it's open, it's leave a gap. You get it? it actually
Okay.
leave a gap. So that gap,
Okay.
that's the reason. And then there another reason is that they are, I mean, they are holding you, they are taking care of your trade for that evening. Okay, so they will charge you for the job that
Okay.
they are doing for that. Yeah. So and then we have behind the scene. The behind this one is very very important. Okay, it's very very important. The behind the scene is the it's a direct fee a broker it can also determine as how they profit from their clients' activities. As for us, you get it. So let's say it's
Okay.
more like we have the transparent. It's it's less transparent. You get it. It's less transparent to the average trader like me and
Okay.
you, or like you that you've joined it new one. Because for me, like this, I've traded XNet for I think 2 years now. I've used XNet for 2 years now. So for me, they have my performances there. If I'm a good trader, they know. You get it? Aha. But you that you
Mm,
came
yeah.
new now, they don't know you. You get it? Aha. So they will
Okay.
not place you in
Yeah.
terms of good aspects. Okay, they know this guy is very good. So whenever you take a trade, we will send it straight to the market. You get it? Or
Mm,
this guy is not good. So whenever you
yeah.
take a trade, we'll also take against him. So that's is basically a we have a book model and then we have the B book model. That's the B book is the market, I mean, market makers. You get it? And then the
Okay.
A book is the straight through process. This is the model the broker acts as a true intermediate. Intermediate, that's the A book. They pass your trade order directly to a liquidity provider. You get it? So that's a large bank or like financial institution. The broker profits solely from the spread and a small commission. They don't take the other side of your trade.
Okay.
Yeah. So this is the
Okay.
transparency one. But the other one is not like that. That's the market makers. The B book, no, it's not like that.
Mm,
So when they see you like, okay, Mr. Charles is not good at trading. So whenever he places a buy, he will place a sell against him. So they will use you as a
mm,
strategy. You get it?
mm,
Yeah. So instead of
yeah.
instead of passing your trade to the market, they they fail it in the house. That's their company that in their house. They take the opposite of your trade, which means they profit directly when you lose money. You get it?
Mm,
Ha.
yeah.
So that's how it is. So so that one your the broker success is tied to your losses. Whenever you make loss, they are making money, they are happy. And then we have the hybrid model. The hybrid model is maybe one broker that use all the two model, the B and then the A.
Mm,
You get it? He has people that
yeah.
take position opposite side of their position and get profit from their losses, and he gets other ones too that he take position like he send their position straight forward to the institution. Yes, so
Mm,
that's how they also make money from it. So
sorry.
yeah. So so is there anything I don't understand in terms of brokerage? Is there anything I don't
Yeah.
understand? We'll,
So maybe you.
we'll go to practical aspects. Very, very distinct. That one is very difficult, small. So we have to get this one
Okay.
first. You get it? then
Okay.
we know
Okay.
something. Yeah.
So, like, what do you look out for in choosing maybe a
Okay.
broker?
Okay. As for you to choose broker
Yeah.
now, I think is not that um difficult than first. You get it? So now that I know that
Okay.
this broker is very good in terms of excellence, I have their numbers in case anything I call. You get it?
Okay.
So
Mm-hmm.
in now it's more easy. But the things, let me gonna give you the things that you will be when you are choosing the brokerage. The most important thing is the regulation aspect. You get it? A regulator broker, a
Yeah.
regulation aspect, like maybe in terms of law, and there's an institution that taking care of in terms of if the broker do anything mistakenly to their clients, they have
Oh,
someone who may close the company and then pay you the
okay.
client. You get it? Let's say they
Okay.
are the let's say they are B broker. Let's say they take opposite side of your trade always. You get it?
Mm-hmm.
And then you get to know
Yeah.
that moments you lodge complaint, they can shut down the company. You get it?
Oh,
Because these
okay.
people have been
Yeah.
regulate, and the regulation too has a minimum amount of money that every brokerage company must have. So in terms of shutting down your
Okay.
money, if your money is in the account, they have to. That's why we have verification. If you
Oh,
verify, moment when the company shut down and then the regulators come around, they will know that, oh, this person has this money in his account, so we'll find this person and then give his money back to him or her.
okay.
Yes, so that's the regulation aspect. And then the where the this thing to where the company is, you have to find where the company is. Okay. And then think South Africa, Dubai. We have, I think headquarters is in Dubai or something like that. Yeah. So for you to choosing this thing is very, very important. As the question that you asked, you get it. Uh-huh.
Okay.
So the key aspect is the regulate is the broker regulated broker. You
Okay.
get it. If the broker is regulated, then it's good. You are good to go. It's good. And then as we are in the same distant banking class, right? So know
Yeah.
before your customer KYC, right? Is it KYC or know before your
Yeah.
customer? Yes.
Yeah.
So we have some country that they are very scammers, or like they are very in terms of fraud activity. You get it? So you have to check. That's the reason why you are the places is very, very important. So
Oh,
that's it.
okay.
So have I answered your question? Do you understand?
Yeah. Yeah. I've understood.
Okay. So we are going back to this one, the understand of currency pairs. Oh, no. MT4 and MT5 and trading view. Now, Abi, you've used it, right? You've used MT5 and trading view, right?
Okay. Trading view, I have it on my phone, but I don't have much knowledge about that. But with the MT4 and MT5, I mean, the mobile phone version of it, I mean, yeah, I've gotten used to that, especially the MT5.
Okay.
Then, yeah, recently I collected my friend's laptop. I downloaded it and I tried to customize, yeah, the chat
Okay.
on
Okay.
the interface.
Okay. So I think the MT4 and MT5 trading view, I do everything I place a trade, I place stop loss and everything in the MT5. The MT4 is the old version. You get it? That's the old version. So I place entry everything here. In terms of I prayed. So I place every buy and selling here in this. Hello, do you hear me? You know the overview of forex trading, we know the brokerage, okay. We know the MT4 and MT5 and trading view. And currency, now we are in currency, understanding the currency pairs. Okay. And then we've said that I've said that currencies are traded in pairs. Get it? And we have the base and then the code currency. And then basically when you are trading in terms of base and then codes, the code determines the 1 unit of base. Get it?
Okay.
Yeah, and then we have the major and then the minor and then the exotic pair. So and then the major pair is the pairs, the developed countries with the that are traded in pairing with US dollar. You get it? That's very easy that you can understand that way. And then the minor ones are the developed countries without US dollars.
Okay.
Yeah, and then the exotic pairs are the developing countries with developed page. You get it?
Okay.
Yes. So that's how this is very simple explanation that we can get. And then that's left with one thing. Okay. Let me ask you this question because you've been trading. Now you've shared the currencies pair and but I'll left with this one. So I left with this one and oil. How do you know how do you know? Because you said you nearly traded gold, you are about to trade gold or something like that. So how do you understand in terms of these things? How do you categorize XAU USD and then the oil? How do you understand how they are paired?
Okay. So I think oil is a commodity.
Okay.
Then the SAUUSD, which is gold.
Okay.
Yeah, gold is a commodity.
Okay. Okay.
Yes.
So that is okay, gold. Okay, that's it. So gold is symbolized XAU USD. XAU XAU. Okay, that is the symbol and represent one own of gold. Okay, so it show the price of.
With this one, is it not to? We have the
Nasdaq and other things. So
yeah,
we have
and the
Nasdaq. We have Nasdaq, S&P 500. A lot, but yeah, but so. But we'll get we'll get all we'll do all. We'll get it. Yeah, I think Nasdaq. We'll have to know all before tomorrow. Before we meet at that time.
Okay. When it comes to the XAU USD, I think it is two. It is two. The one that is paired with dollar, and the other one that is paired with, I think, Asian something.
Yeah, you see, every pair that you see here is paired with different currencies. You get it?
Okay.
Yes. It's you see gold pairing with pound. You see it's
Mm.
pairing with Japanese their currency. You see it's
Yeah.
pairing with France currency, Swiss francs. Okay, Swiss. So
Mm. Yeah.
it's pairing with, but the one that moves like wood is this one. Is the gold. Is the SAUUSD. You get it? Is one
Okay.
with the dollar. Ha.
Okay.
Yeah. So that's how you see majority of trader trade this, and it's hardly to see that someone is
You,
trading.
okay, so you the one you trade is the one with the dollar.
Yes, one with the dollar. I don't trade anything apart from that.
Oh, okay, okay,
Yeah.
okay.
So that is it. So as gold is often seen as, it's actually often seen as heavy. You get it, heavy asset. So
Mm.
meaning the value can be rise during times of economic uncertainty, which makes it popular alternative for traditional currencies. You get it?
Yeah,
So
yeah.
let's say when COVID came, people were, I mean, they are doing like they are taking their money in terms of aspect to change it. They will be buying gold. You get it?
Mm.
They will be
Yeah.
buying gold so that in case of anything that happens, they have their money because gold is very heavy one. You get it?
Yeah.
Ha,
Yeah.
than the currency. So this thing is instead of one currency, okay, against other, this one you are trading the commodity against the currency. You get it?
Mm.
So
Yeah.
that's how it is. And then so now you understand the gold and then um, the USD. Gold is
Yeah. I
the
understand it.
asset. Yeah, is the heavy asset that people mostly they buy it and keep it in terms of I mean
Okay.
how it is. Yeah.
Yeah, so that
So,
it will
and then
appreciate in value.
yes, to appreciate. So and then the oil, we have the oil, we have US oil.
Mm.
Um, US oil. So me basically I trade these two, oil and then the gold. So
Oh, okay.
this yeah. So it's symbols for West Texas Intermediate. You get it? So sometimes if you are in your broker and then you search like oil, you'll never get it. You get it?
Mm.
Unless you search WTI before you seeing it in your brokerage account, your brokerage
Okay.
platform. Yeah. So that's how that one too. So, but most of it, it's in trading view like this is US oil. Uh, but
Okay.
some brokerage this thing too. You see, I think SNS has US oil. Yes. So another broker you see different one. Yeah, that's how it is. So so
So I
so
think with the pips, yeah, the pips. I mean, when you open a trade,
okay.
yeah, when you open a trade, I mean the pips shows the the profit that you are going to make or the loss, the number of this thing you are going to risk.
Okay.
So the
So you will come back there.
okay,
Okay. We'll come
okay,
back there.
okay.
So the oil aspect in the future prices in the oil. So let's say traders they buy or sell oil based on their expectation of future oil price. You get it?
Mm,
So which influence the global
yeah,
supply and demand. I mean, geopolitical event and economic condition in terms of those aspects. Which country, I mean, which country that they in terms of buying activities, like they deal with oil power, which country is that?
Which country deal with oil?
Country, yeah,
I think uh, Russia and Ukraine, right?
Russia. Okay, I think Russia also they deal with, and then can I'm saying that because in terms of trading wise, Canada,
Uh-huh.
you get it, Canada. So
Yeah.
if we are trading gold or if we are trading oil, in terms of
Mm,
geopolitical events and all that, you most of the time you are trading oil, you have to look at the Canadian, I mean, Canada's activities. You get it?
mm,
So most of
yeah.
the time, if in terms of fundamental activities there, you check on the, as for the Russia Ukraine, it affected. All right, it affected, but most of the time, Canada, you can get much more money in terms of looking at aspect in terms of Canada. You get it? Uh,
Okay.
yeah. But we are going in terms of indices. That's the Nasdaq and then S&P. Okay, that one is indices. You get it?
Okay.
So
Okay.
indices are not a single asset, but rather a collection of stocks that represent a
Okay.
specific market or set of economy. So when you trade an
Okay.
index, you are speculating on the overall performance of all the companies within that index.
Okay.
So the Nasdaq is a major American stock exchange, known for its high concentration,
Okay.
mm, technology and growth companies. So in terms of tech activities, you get it. It's Elon
Yeah.
Musk and all that companies. You get it. That tech.
Tesla.
Uh, so the Nasdaq index tracked the 100 largest non-financial company listed on the Nasdaq exchange. You get it. So
Okay.
that's the
Yeah.
it contains hundreds companies. You see, so when
Yeah.
those companies are doing well, we see that Nasdaq, damn automatically the country is doing well.
Yeah.
You
It
get it?
contains the 100 most popular or most
Yes,
popular companies
in the US.
around the globe.
No, it's not around the group.
Okay, in US.
Yeah.
Okay.
So
The
in general,
point.
like Apple, like let's say Apple, Google, Microsoft, you get it. They are
Yeah.
under Nasdaq. That's why
Okay.
in saying that I said in tech and growth companies. Uh, so
Yeah.
so basically, so most people look at Nasdaq and compare the performance of the country. You get it? Because if the
Mm,
100 companies are doing well in that country, automatically the country is doing well.
yeah.
Yes, if the company is not doing well, automatically the country is not doing well. You get it? So most of the people compare that one to, and then you say someone, oh, US is not doing well now because someone is near someone like that's going the S&P 500. That one too is the stock market index that tracks the performance of 500 of the largest publicly traded company in the United States. You get it? And it's widely
Yeah.
considered the best indicator for overall health of US stock market. You get it? So
Mhm.
these two is very, very important. You get it? Especially if you are a swing trader. If you are a swing trader, it's very, very
Okay.
important. Yes. So this one is tracking what 500 companies in the United States, and the other one is
Mm.
100. The Nasdaq is 100. So that is it. So that's the difference. So now you know this, so you can decide to trade this once. You get it?
Yeah.
And for me, at the end, I started with this the currency and everything, but now I trade gold, oil. But I'm now
Okay.
here to go for Nasdaq and then S&P 500. I'm going to backtest my strategy on that and see whether if it works. You get it for there too.
Yeah.
So okay, so now we are going to the PIP aspect. The PIP. So the PIP, which stands for the percentage in points, okay, it stands for percentage in points.
Yeah.
It is the smallest unit of price movement in a currency pair. So it's how
Mm.
traders measure profit or loss. How we the traders we measure our profit or loss. You get it?
Okay.
So
Yeah.
this currency pair are pips in fourth decimal place. And for pairs involving the Japanese yen is second decimal place. So let's say example like this one, like this pair like this. You get it? Let's say the currency pair
Mm.
from this is maybe when it's price move up from you. Let me do. Okay. Let's say price move up from I'm coming in. Okay.
Okay.
So let's say price move like this. Okay, move from 1.0550 to
Mm.
0.0554. What's the difference? How do you see the difference?
The difference is four.
Okay, so that means
Four
the
pips.
market has moved 4 pip. You get it?
Okay. Okay.
So that one you start the pip count start from the last one. You get it?
Mm.
So let's
Yeah.
say if the market move from this to this, how much pip does this thing move?
10. 10 pips.
Okay, it has moved 10 pip. That's good. That's good. So
Yeah.
that's it. Okay, this one is the 4 decimals. Okay, so let's go to the currencies with the Japanese yen. You get it? And then we do that one too.
Okay.
Yeah. So the same thing that it goes. But now it's easy for you to measure it. You get it? We have we have some
Mm.
tools that we use to measure the measurement of how it is. Okay. Now we can use these tools. If your this thing is here, then I would have. Okay, now you can measure it. We have a tool that we can measure it. Don't necessarily like use calculator and being punching it. You get it? We have a tool that we
Mm.
can measure it, and after this tool, we can measure it with this our profit and stop loss target. This thing, this one. You get it?
Yeah.
Let me quickly show you on that. So let's say if I'm longing this, if I'm longing my stop loss currently, let me create this one. Look at my stop loss. Okay, my stop
Mm.
this 11 pip. Okay, 11
Okay.
1.5. Here is it. You see that it show here. You get it?
Yeah.
And I'm targeting 32, 37. You get it? Pip. So in this one like this, if I'm calculating in terms of aspect, I want to know the lot size. Okay. If I want to know the lot size, now I know my stop loss, pip in stop loss. I know that it's 11 pip. It can also be maybe 20 pip or something. You get it? Based on your strategy or how you use it. And maybe target. And this one too is risk to reward ratio. This one is 2.48. You get it? That's the risk to reward ratio. Yeah. So that's it. So you can use this one to measure the pip in terms of everything. You get it? So let me quickly show you the second decimal place Japanese pips, so that we have USD. Okay. So let's say coming in.
Okay.
What's the difference between this exchange rate and this one? Mr. Charles. How do you see what do you see? What do you see here? What is the difference here?
I think with the first one, the number before the points is only one. But
Okay.
with the one you have written under here, the number before the points is three.
Okay. That's good. That's good.
That's three decimal points.
That's good. You are right. So in this case like this, okay, when the price went, so now let this one also start from here. Okay, when this one moves to 14.5 point sorry 145.20, and then it move up from 145.21. That means it has moved 1 pip. You get it? So this one starts from here. So from here now, it's how do you see the difference? You start count back from back.
Okay.
Yeah. So
So the
this
difference is
one,
that
the difference is 30 pip. You get it? You get it? Because that move from 20 to 50. You get it?
yeah, I get that.
Yeah. So if this one move from this to this, that means it has moved how many? 130 pip. 130 pip. You get it? That means the market has moved 130 pip. You get it?
Okay.
Yes. And then we are going to the almighty XAU USD. Trust me, when I started it, understanding gold pip was very difficult. Understanding pip movement in gold is very, very difficult when I started. Because you see someone saying different thing. You have to get your source of this thing from one area. You get it? If you're trying to get it from here, you get at the end of the day, you will never go anywhere. Because you can't find what actually works. Yes, you can't. You can't. So you have to get everything must come from like one place or something like that. If you are learning something, just focus on the other. Don't focus on here and here. It's a waste of time. At the end of the day, you will not do anything. Just sitting there and comparing. So let's do the let's say this price one 1 5 1 5 0 0. I'm coming in. Friends 25. So if you look at this one, and there is the peak movement, okay, in terms of you start count it from back like the other ones. You get it? Let's say this one move from 50 to 51. It has moved 1 pip. You get it? It has moved one. And if it's moved from 50 to this one, 50 to 60, 61. That means it has moved how many? 11 pip.
Has moved, yes, 11 pips.
Yes. So that's how it is. So when it come here to that means it has moved 100 pip. You get it? Let's say this from 0 to this. So that it has moved 111 pip. You get it? Do you understand?
Yeah.
So
I get it.
Yes. So that's how it works. This is the most difficult aspect of it in terms of that. And that's it. That's how. So you start counting it from the decimal, okay, up, and then you bring it forward. Yes. So you start back and then you count it. So you can also use it to measure. We have the measuring tool like this one. Okay. Next time that we'll meet, I'll let you share your screen and then I'll show you everything. You customize everything like my own. You get it?
Okay.
So that everything will be easier for you. And so, is there anything that you don't understand? Is there anything that you don't understand?
No, I don't think so.
You understand
everything?
Everything.
Yes, please.
Okay, so no question. Because I'm afraid of question.
Maybe I'll think of them then. Our next meeting.
Oh, but ask for the group. Ask for the group. We look. You guys have me. Oh, you guys have me. You guys are very, very lucky. You guys have me. We can chat. We can do everything in the group. You get it?
Oh, okay.
If you see me like
So I'm going to go through, I mean, all that you have taught me today.
okay,
Uh, but some of them are really practical that I have to
okay,
sit down and go
yeah,
through
yeah.
it.
In terms of
So if any question,
pips aspect, pip
yeah,
aspect is very
Yeah.
very practical.
Yeah. So if any question,
Okay,
I'll bring to your notice again.
okay, okay.
Mm.
So I think today. So now you know our objective. Are we? I mean, on point. The objective. Now you know everything, right?
Yes, please. Yes, please.
Okay. So
Yes,
you
please.
know. I mean, okay, the spread. You say you know the spread. Even with also, I mean, the spread
Yeah,
is the
tackle it.
difference between the ask and the bid and all that.
Yeah, we have tackled it.
Yeah. So
Tackled it.
this is our first meeting. So the first meeting, we are not expecting much. So the hard
Yeah.
work is down there. So yeah.
Okay.
So
So,
everything we'll
yeah.
chat everything in the group. Okay.
Okay.
If you
Okay.
learn and you
Okay.
don't understand anything, and you have to let me know in the group. You get it? I'm here for
Okay.
you guys. Help me. You get it?
Okay.
Yes.
Okay.
Well, okay. So today class
Mm.
is end. Okay.